Hi, this screencast is going to show you how to do an income statement for a company. We're looking at question 1 from the May 2016 Financial Accounting 1B exam paper. So if you're studying for this exam, this is quite a good question to revise. Question 1 looks at or gives you a set of accounts in the form of a trial balance. So it gives you a trial balance, also gives you notes, and then asks you to prepare the following statements. And in this screencast we're just going to look at preparing the income statement, and then there'll be a separate screencast on part B and part C. We've already looked at how to remember the format for part A, B and C in a separate screencast, so we're going to just jump into part A. If you're not sure how to remember the format, go back and look at the old screencast or the previous screencast to this. So first of all, you go to your worksheet, and here's the income statement, and there is the format that I was talking about. And when you go into the exam paper, that's the first thing you should write down on the page, is write down the format. And now all we're going to do is fill in the amounts, and that's pretty straightforward. Some of the amounts can be filled in straight away. There are no workings, or very simple workings. Sales, for example, is a very simple item. We come to our question 1 and we look for sales revenue, and here it is, 232. If there were any sales returns, we would reduce the sales revenue by sales returns, but there are none in this question. So unless there's anything in the workings, so we need to look in the notes in case there were any adjustments to question 2. And there's nothing in the notes here about workings to sales, so we just input 232 in as our sales figure. So 232 goes in, and you'll note the heading here is in millions because everything in the question, all the figures are in millions, and even in the workings the figures are in millions, so it's just easier to show the figures in millions here, and it saves having to write out all the zeros. Cost of sales will be next, and you could do that next, but it's a bit of a working, so I'm just going to do the really easy ones. Other operating income is a very straightforward one to do. You come to your trial balance and you're looking for other types of income, and other income could be rental income, it could be a revenue grant that was received. So you're looking for those kind of things here, and generally on the trial balance, income is revenue. It should appear on the credit side of the trial balance, and as we look down here, we've rental income of 3 on the credit side, and that needs to get shown in other income. And I've just added it in here, and that's going to be added to our gross profit. And I'm just using this here as a note. You don't need to put in this, but it helps, particularly with the working, just to show the working somewhere to the side like this, so the examiner, the person correcting your script, can see how you came up with the figure. Interest income and interest expense are very straightforward. Interest income, we're looking for things like investment, income from investment in shares, or income from financial assets. So we go to the trial balance and we look for some type of income in that regard. And so here's question 1 down the trial balance, and there's investment in shares, but that's investment, we don't want that, that's the asset. That would be an asset, a financial asset. What we're looking for is income, so you need the word income in it, and it might say income from financial assets, or here it says income from investment in shares is 4, and that is what we're looking for, and that gets added in. Interest expense, this will be debenture interest, or if you've borrowed money, a long-term loan, or any interest you pay in borrowings. So we go to the trial balance again and look for that. So down here is debenture interest paid of 3, but we need to put in the total interest for the year, not just what we've paid. So we need to figure out what's the amount owed for the year. And here are debentures due to be repaid in 2020, and we've borrowed 80 million, and it says there's 10% is the interest rate on them. So to calculate the interest, it's just, so to calculate the interest for the year, you multiply the amount borrowed, which is 80 million or 80, and multiplied by the interest rate here, which is 10%. So 80 by 10% is 8, and that's the interest expense for the year. And we can ignore this 3 million because down here, so that's what's paid, but really what we owe for the whole year is 8. And that's what goes in to the worksheet. So there's the 8, and I've just showed the working for it. And it's always the percentage multiplied by the amount of the debenture. Taxation then will either be given in the trial balance or else in a note to the question. So you do a quick scroll down through the trial balance. There's nothing to do with taxation there, so we look for the notes, and then you might start in the notes really. And it tells us in note 5 taxation charge is 11 million estimated. So that's going to be a current liability, but also we need to show it as an expense. And there it is. So we're only left, the things that are left to do are the cost of sales and administration distribution. And they're not bad at all. So we're just going to start on cost of sales and then work our way down to admin and distribution. And then that'll be the end of the income statement. So to do the cost of sales, you need to know what goes into it or what makes it up. So cost of sales basically is your purchases, the cost of your purchases. And if we have any purchase returns, this reduces the cost of our purchases. We also adjust for any opening inventory and closing inventory. If we have any unsold items or goods at the end of the year, well, they shouldn't be included in this year's purchases, they should be included in next year's. So that's why we reduce purchases for any closing inventory, and we add any inventory from last year that we, opening inventory, because they'll be sold this year. So we're matching our sales, this year's purchases, and any inventory bought forward with this year's sales. And then if there's any depreciation, it goes in here. So that basically is the cost of sales working. So you could show a separate working like this, or else you could just put in cost of sales and show the working here, like I've done here. So it'd be quicker to do it here. So what all you do is go to the trial balance and look for those items. So here's our purchases, 120. We'd look for our purchase returns. There are none in this question. Inventory at the start of the year, that's opening inventory there, 34. Closing inventory at year end is always underneath the trial balance, and it's 36. And then we look for anything on depreciation. So to know if depreciation goes in, we have to look at the note on depreciation, and here it tells us depreciation is to be provided, and this one goes into cost of sales. So 5 million goes to cost of sales, the 4 goes to admin, so we don't care about that because we're doing cost of sales now. So we're just looking at part 1. We're going to add 5 million to cost of sales. So they're the things that go in. Purchases 120 plus opening inventory 34 minus closing inventory 36 and plus 5, and that adds up to 123. So don't just do a figure and put in like that, because if you get it wrong, the examiner doesn't know how you came up with that figure. So if you're pushed for time, you can do a simple working like that, and at least the examiner then can say, yes, you got that right, took away the wrong figure maybe, or didn't include depreciation. So you'll get marks for everything you do right. But if you put in one figure and show no workings, then it's difficult to get marks. So that's our cost of sales, and then that just gets taken away to 109, our gross profit. Now if you wanted, you could show a separate working for cost of sales like that and just bring the figure up. It's up to you yourself really, but it's quicker in an exam situation to just show it there, and it's pretty simple workings that we're doing, so it is okay to do that. Now the same with administration distribution. Administration, there's only going to be 1 or 2, maybe 3 things to be added together, or plus and minus, so you can show the workings for these alongside here. So the first thing to do is look at administration, and here's our expense, and it's going to get adjusted for a couple of different things. So admin expense are 42. Then in the note it tells us that there was expenses only of 2, so 42 plus 2 is going to go up by 2. And then we just look at depreciation, and it tells us 4 million depreciation needs to be provided for and should be allocated to admin. So it's going to be 42 plus the 2 that are owed plus the 4 depreciation. And really that's our work in there for admin expenses, which adds up to an expense of 48. Distribution is next, and distribution was 30, and in the notes it tells us that an amount was prepaid of 3. So of that 30 million that was paid, 3 million was paid for next year, for 2016. So we're doing 2015 accounts, so we don't want to include any of that expense which relates to next year. So really 27 is what goes in to our question. And like I said, there's the 27. Don't just show the working 30 minus 3. So 232 minus 123 gives a gross profit of 109. Then we add the other income and take away the expenses. So 109 plus 3 minus 48 minus 27 gives us 37. Profit from operations, or operating profit, or sometimes that's called profit before interest and tax, or PBIT for short. And then from the 37 we're going to take 37 minus 8 plus 4 minus the expense plus think of 33, and then take away 11 tax expense, and we end up profit for the year 22. And that's the end of the income statement. And that's the end of our income statement. The next screencast will show you how to do the statement of changes in equity. And then there'll be another screencast separate to that which will show you how to do the statement of financial position. So I hope that was useful, and good luck with the revision.